Hello there. My name is Daniel Lader, founder of Lader CPA and Associates, and welcome back to our ongoing series, Building Your Private Practice from Beginning to Infinity. Now, to start out, watching K-pop Demon Hunters on Netflix made me realize my life's the same. My therapist battles emotional demons, my accountant battles tax demons, and I'm just sitting there dancing badly in the middle. All right. Now, to get into our topic this week, we are going to be talking about how to handle bad debts on your tax return. Now, this is something that it's very it might be common for you, it might be uncommon for you, but it's still an important thing to be aware of, to know what you have the power to do. So, let's go ahead and jump into it. So, have you ever had a client who didn't pay their bill and you just moved on, wondering if there's any tax relief available? Bad debts are frustrating, but the IRS does allow certain deductions if you handle them correctly. Today, we're going to go over what counts as a bad debt, how to report it, and why it matters for your private practice. First, why does a bad debt matter? These are unpaid invoices. They impact your cash flow and profitability. They're bad. We don't like it. There's a reason it's called bad debt. Now, for tax purposes, not all uncollected amounts can qualify as bad debt. And knowing the rules can prevent missed deductions or IRS issues. So, what counts as a deductible bad debt? Well, these are only amounts that have previously been included as income. Now, if you use the accrual method for your accounting system, that is where this issue arises. If you use the cash method for your accounting, this issue is very uncommon. Now, those are big terms. I'm not going to dive into them. Your accountant, your tax professional can describe them better to you, but most of you therapists are on a cash-based system. So bad debts really aren't too big of a deal, just occasionally. Now, when you are a cash-based taxpayer, like most therapists, unpaid client session fees are not deductible. They are simply not included as income. That's it. The cash isn't paid to you or the money isn't paid to you, so it never is included as income. It doesn't create a separate deductible expense. That's double dipping. Now, deductible bad debts, deductible bad debts can also apply to loans that you've made in the course of your business that won't be repaid. For example, if you personally loaned money to a colleague or even a client and it was never paid back. Now, how you report bad debt deductions. For your business bad debts, the deduction is an ordinary business expense on your Schedule C or your business tax return. So ask your tax professional for advice on how to report that, and they will usually do that for you once you tell them what the amounts are. Now, if you have a non-business bad debt, that's something different. We're not going to talk much about those, but they happen. If you have a non-business bad debt, that can be reported as a short-term capital loss on your personal return on a Schedule D. Those are rare. Think of things like bank failures, and they don't repay you your money. Not common. It happens sometimes, but that's the nature of a personal bad debt. Now, it's very important to document these things. Show that the debt was legitimate and collection attempts were made. This isn't you loaning $100 to your Uncle John and he just never pays you back. There was no documentation. That was more of a loan between two related people. And there was there might have been an attempt to collect it, but there was no legitimate attempt to collect it. So keep documentation. Make sure it's a legitimate loan or other item like that. Now, what are the benefits of handling your bad debts correctly? Well, I think that one is going to be pretty clear, but let's go into it anyways. First off, when you report your bad debts correctly, you are avoiding overstating your taxable income. You don't want to pay tax on money you never get. That makes sense. And it helps to align your tax reporting with the actual business reality that you're seeing. Also, it provides you with some peace of mind knowing that you're maximizing all your deductions legally. Now, here's some tips on what you can do. First, keep detailed records of invoices, communications, and collections efforts. Review your accounting method. Are you cash or are you accrual basis? That changes what qualifies and can be counted as a bad debt. Again, most of you will be cash basis, so this is kind of a non-issue, but a few of you will be accrual basis, which allows bad debts to happen. And always consult with a CPA or your tax professional before writing off bad debts. Get their help doing that properly. Now, I'd like to give you an example just to kind of illustrate what we've been talking about. Let's say you run a private practice on a cash basis. A client cancels several sessions without paying and owes you more than $500. Because you never counted that $500 as income, again, your cash basis, you cannot write that off as a bad debt. Now, let's take a different example. Let's say that you loaned $2,000 to another therapist in your group practice to cover shared office expenses, and they never paid you back. That could potentially be treated as a deductible bad debt. Remember, um, make sure the debt has proper documentation, make sure communications are documented, and the collection efforts have been documented. Now, just some closing thoughts here. Bad debts, they might feel like a total loss. But with the right tax approach, you can at least soften the financial hit. Handling them properly keeps your tax returns accurate and your stress levels lower. Now, I've got a question I would like you to ponder on. If one of your clients stopped paying and owed you $2,000, what would that be deductible on your tax return or not? It's different answer for everyone. Now, if you have any questions about the topic we've talked about, feel free to reach out, comment on this video, DM me directly. I'm happy to answer any questions as they come up. Now, if you would like to schedule a free 30-minute discovery call with someone at my firm to talk about your practice and your strategies or your tax struggles, go ahead and DM me. We'll send you a link for a free 30-minute discovery call with someone at my firm. Don't forget, follow and subscribe so you can be aware of future tax events and see the tax tips that we're offering out there. And visit our website, latercpa.com. I will see you all on the next video. Have a great weekend and keep helping others to help themselves, and let us help you so you can do just that. Bye.